But don't forget, tomorrow the Federal Reserve meets for a second day, and many expect policymakers to raise interest rates for the first time in a year. And the path of interest rate increases could be a pivotal factor for the market and investors. Steve Liesman tells us what some of the top economists and money managers are looking for.
Big questions heading into tomorrow's Federal Reserve meeting after all the changes in the markets and politically. Wall Street, according to the CNBC Fed survey, seeing a more aggressive Fed in the years ahead when it comes to interest rates. And while they generally approve of the policies of President-elect Donald Trump, they worry that the stock market may be too optimistic and Trump's trade policies could hurt growth. Here are the expectations. 96% saying the Fed will raise rates at the meeting tomorrow. 44% say the next rate hike is coming in May. And you can see when we look at the expectations for rate hikes that it's gone higher. What was 1.1% projected in November for 2017, now up to 1.3%. They see rates rising, the Fed funds rate rising to 2.1% in 2018 and all the way up to 2.7% in 2019. That's 50 basis points higher than was expected before the November meeting by our respondents. The respondents do think that the market has gotten a little bit ahead of itself. 56% saying that the market is too optimistic about Trump's policies. 42% saying they are realistic. And looking at what they think about Trump's policies, generally positive. 3/4 say they are positive about individual tax cuts proposed by the president-elect. 89% like the deregulation that's been talked about, and 92% they really like the business tax cuts. But looking over here, 73% have a negative view on Donald Trump's trade policy. Put it all together, and the outlook for gains in the stock market are maybe more muted than has been suggested by the recent gains. Respondents see just a 4% rise in the S&P 500 for next year and 9% by the end of 2018. For Nightly Business Report, I'm Steve Liesman.